there must be like thousands of emails I've shot out. I couldn't even count how many people I spoke with. Make sure that you're really doing your research. You don't want your life to be miserable. I feel like acquisitions just follow me wherever I go, for better or for worse.
How did you even do that virtually?
I wanted to, again, go with the no stone unturned kind of policy.
Any particular people you'd like to mentor?
Every time people ask me for advice, I'm like, do everything you can. The last thing you want to admit if you end up not getting an offer, that you didn't do enough.
Okay, Vamshi, thanks so much for taking the time to join us today.
Thanks for having me, Patrick. Great to be on.
It'd be great if you could just give the listeners a short summary bio, where you're from, so they have some context here.
Yeah, for sure. So I'm originally from Livingston, New Jersey, small suburb right outside New York. I was born in New York and moved there shortly afterwards before I could even remember anything. Did all my high school there. Then for undergrad, I went to University of Chicago, where I majored in economics and public policy. And on campus, I was at first more involved with a lot of venture capital, entrepreneurship type clubs. Those are the people that just naturally gravitate towards more the self-starters, the people who are working on more unique projects. And so through that, one of my first internships was working with Sandbox Industries, which is a venture capital firm. And I really enjoyed that experience. But the advice I got was really to get a real technical skill set before diving back into that world. So decided to do investment banking, spent a summer with Piper Sandler. And that was during COVID, so it was a virtual internship. Really asked to be put in the healthcare group. I did a summer with DCM, that's just where the group needed me during COVID. And unfortunately was not able to replace my group. So recruited around full time and eventually landed a role at Lyric in their healthcare services and technology coverage group. And this is a great opportunity. This is when it was still SVB Lyric. And so the market was doing very well in terms of healthcare service technology. We were drowning in deals, honestly. I was getting a lot of repetitions, but it was super busy. And as a first-year analyst who started virtually, it was difficult to get ramped up the same way my peers had the years before being in the office. And so after about a year and a half of being at SVB, I made the jump to Greenhill. I was looking at joining private equity, but there was a really good mentor I had at Greenhill who was the head of the group at the time, which was private capital advisory, that really sold me on the vision. And I specialized at Greenhill in secondaries and sponsor coverage. So worked very closely with the head of sponsors, pitched a lot of GPs on doing continuation vehicles and similar types of secondary transactions. Then that was about a year. I was at Greenhill from December 22 to November 23. The acquisition happened with Mizuho acquiring Greenhill. And needless to say, most of my group had made the jump. Part of my group jumped to Houlihan Lokey. My head of my group, who was my mentor, he jumped to this place called Devon Park Advisors, which is started by John Costello, the former head of PJT Park Hill. And that was down in Palm Beach, Florida, where coincidentally I am right now for the weekend, actually visiting some friends.
Nice.
And you can see the sun. It's not Philly where
It's great.
And so there, it was a very focused secondaries advisory shop, very small team, about 15 people. And I was there for about a year and a half before we got acquired by Perella Weinberg. I feel like acquisitions just follow me wherever I go. I'm a leading
indicator. It's like wherever you join, it gets acquired.
For better or for worse. I think in most cases for the better. And I started my MBA Wharton this past August. So I've been in school for about, I guess, 4 months now, 3 months. Wow, creeping up on me how fast time is flying. But yeah, here I'm just exploring what other opportunities are out there. Looking at different routes to possibly pursue, whether it's on the investing side or looking at more entrepreneurship. Just want to take 2 years to really take a step back and see what life has in store for me next and what I really want to enjoy doing.
Awesome. So let's kind of go back to the undergrad days. So you University of Chicago, right? And econ major. Was it like as early as freshman year where you're like, for sure, I want to do finance? Was it kind of later? So did you know on-cycle recruiting was happening? And so your grad day, what year were you? 21?
I graduated in June 2021. Yep.
21. So kind of like the first few years were still kind of normal years, correct? It was like 2018 or 18 around there. And so were you in that whole sophomore recruiting cycle? It was, I think back then it was probably sophomore spring or like summer, kind of for junior summer recruiting. And talk to me a little bit about that. Like, had you ramped up? Were you ready? Did you get into some processes and get knocked out? Because obviously it's very competitive coming from UChicago. There's a ton of kids, but I'd be curious to hear like if banking was on the radar or how you even thought about that. I know you said VC initially. So talk to me a little bit about that.
Yeah. So, I mean, UChicago is obviously a very target school. So a lot of kids we feed into banking. So naturally I was kind of exposed to it, fortunately, from a very early time in college. This is my freshman year. Like some of my friends in my different clubs in my fraternity, they were already in banking, had already done internship, or already had their full-time offer secured. So I had always been in contact with them. I voiced to them, as I mentioned, that I want to do VC. And a lot of the feedback and advice I got is to do banking first. That's the natural path if you want to do that afterwards. And in general, it just gives you a better tool set so you can be more successful in that career path if that's what you end up deciding to go on. And so
Piper Sandler was your junior summer.
That's right.
Intern,
yeah.
Right.
So like about the timeline. So as you mentioned, so I secured my sophomore summer internship around Thanksgiving of my sophomore year. So in the fall, this is the summer between sophomore and junior at Sandbox Industries. This is through the Illinois Venture Capital Association. So it's a consortium of all the venture capital private equity firms in Chicago who one of the programs they do is place rising juniors in college with internships with various VCP firms around the city.
Really
and I have an inclination for like obviously venture and healthcare seem like a cool sector. And the unique part about Sandbox Industries, it's actually functions as the corporate venture capital arm of Blue Cross Blue Shield. So got to have the exposure to be part of a large conglomerate and view their investing perspective, which I feel like is a very unique kind of angle to have very early on. And I was using that to really leverage internship recruiting for my junior summer. I had secured the offer for the sophomore summer. Before I started it, I was already recruiting, obviously, for the following summer in the spring of my sophomore year. And so I remember my first super day must have been with Insight Partners, just thinking back. This is DC.
Did it all surprise you, like how fast it was, or because you were at Chicago, there was enough kids in this kind of channel where you knew it was coming sophomore year?
It's a good question. I think it definitely still did surprise me, even though I saw like some people getting early insight days and things like that. Like most of the processes that year were starting in the summer, and then all the bulge brackets I remember that year, Goldman, Bank of America, Morgan Stanley, they had pushed their recruiting to the fall of our juniors, like August, September, versus I was getting super days at a lot of places as early as February, March of that year. So it's spread all over the place. You have to hedge your bets. It's like, do I really want to wait around for a bulge bracket? I had gotten a couple of market, boutique offers in the spring. And with me, Piper, I think hit in like June or July, right as I was starting my internship with Sandbox Industries. And I just really clicked with the team. They gave me an offer an hour after my super day. I think that fit is a very important thing that I look for. I've found good mentors in banking and stuck with them. That's why I lasted in this industry so long. And that's something that's the advice I got when I was very young and have stuck to it. And so one of the managing directors at Piper Sandler just really clicked with during the super day. He unfortunately ended up moving to another bank before I started the internship, but I saw myself working with him, heard good things. I think another member of my fraternity had interned with him or been his analyst a couple years before. So took his reference, and that's the reason I ended up going Piper Sandler. And unfortunately COVID hit, but otherwise I think great.
Let's talk about that. So you're like, okay, I got my junior summer. You have the cool Sandbox VC summer internship at Sandbox. Everything's hunky dory. It's summer 2019. You start your junior year, right? And so you have Piper Sandler already locked up. Everything seems like going great, and then spring comes around and everything gets shut down. Right? This is spring in March 2020. My 40th birthday, 2 days after my 40th birthday, basically.
Oh, wow.
It was like we had a party, and basically half the people didn't show up because it was I don't know what this thing is that's spreading. Anyways, so that internship that became basically virtual, correct? And it was going to be starting June 2020. Talk to me a little bit about that whole process. Like, were they able to actually integrate you at all, or in the work, and like in any deals? Like, did you feel like, I mean, obviously you lost a lot of the experience as an intern. So talk to me a little bit about that and like how you navigated the progression of, I think you got a return offer, right?
That's
that, but how did you even do that virtually? How did you managed to get them like convinced that, not even meeting you in person.
Yeah.
Your team. Sure.
Crushing Patrick. It was a really interesting experience for sure. So I was studying abroad in Paris, January to March of 2020. So it was honestly like one of the highlights of my college experience, like being there. And during this time, they sent out group preferences. In like February, they said, rank what groups you want. There was equity capital markets, debt capital markets, I think consumer, healthcare, some others. I had networked pretty heavily with the healthcare group. As I mentioned, I got really close with one of the MDs during the super grade, was on the healthcare services team. I think he was the head of healthcare services, M&A at the time, and had him introduce me to some of the other VPs, associates on the team, and felt like I had a really good rapport. Then obviously COVID hit, and I think that changed the needs on the different teams for the summer. And I think what happened was the DCM team, I think obviously great people, had a good experience with them. They saw UChicago, they saw econ, they said this guy's probably good with, quant math stuff. So I think they had preferenced me, and that was obviously going to take precedent over what the interns' preferences are, even though I'd preference healthcare. Right. So this place in the DCM was, just grateful to have a internship when the world was falling apart. Lots of my friends had lost their internships altogether, had theirs like indefinitely delayed. So just to have something, especially investment banking during this time, was just a blessing. And so it was 5 weeks long as opposed to the 10 it was supposed to be. We were concurrently doing, I want to say it was Wall Street preps, unfortunately not Wall Street Oasis trading. And that was going concurrently with some live deal work we were trying to do. And I think it was really tough to get us ramped up. Like we did very simple tasks, like watching the analysts flip an NDA while, we were playing the back and forth on the email chain with the counterparties. And it was only 5 weeks. So it was really tough to really get a deep experience. But there's a lot of mentorship with the senior members of the DCM team. Like they would actually take the time to hop on the phone with us a couple times a week, talk to us, because they knew we weren't getting like the proper experience. So that was cool. But at the end of it, I don't know how they determined whether I was going to get a return offer or not. I don't really know what aptitude I showed. I guess I was just hungry to learn and willing to be there and hop on and talk to them. So I got the return offer, asked them to switch me to healthcare, and that unfortunately didn't work out. And then just full-time recruited for a year, which was tough because it was COVID and no one was hiring, / a lot of banks gave 100% return offer rates. So that was tough to get. It wasn't until like May 2021.
Well, talk to me when you said it didn't work out like that. I think that's a really interesting part, because there are people, even now without the craziness of COVID looming, there are a lot of people who kind of are in a certain group and are trying to lateral to another group that may be interested more. How do you feel like that was do you feel like, looking back, that was navigated properly? Would you have changed anything there? Because it sounds like you had the return offer, but you wanted to move to healthcare. Were they at all, not upset, but were they at all like disappointed? And like, did you have to go to them and say, hey, I want to go do healthcare, I'm not really interested in coming back to DCM? Or were you saying, hey, I'll take DCM, but if you can move me to healthcare? Like, how did you approach that? Because I think this is what's really interesting for like the people listening, or maybe there's another analyst out there or intern who's trying to figure that out and navigate that politically, internally, where it's safe, because like they don't want to lose their role, right?
Definitely. I think it's definitely a tough challenge, and I think COVID made it even more unique because you aren't face to face with these people. So I tried to go through HR just to see if there's slots available, and then I don't think I ever mentioned it to the DCM team myself. Actually, tried to go through HR just to see if there's slots available, and unfortunately, they were not. And so I think my advice for interns is like get really good rapport with your teams, and you'll have 10 weeks rather than my 5, right? So if you do want to move internally, I would speak definitely to your team first before you kind of make any definitive things. Just speak with different members of the team, see what the dynamics are. Definitely want to play it by ear. Don't ask them directly on their face, hey, I want to work in another group. But also speak with the bankers in the other groups. I don't think it's ever discouraged to just talk to other people, hear their perspective. So if you want to go to healthcare, for instance, speak to the healthcare bankers, see what the situation is. It is definitely a tricky situation to navigate for sure.
Especially if you know that it's not going to be 100% return offer rate. You don't want to be, seen as like, oh, he's not appreciative of this opportunity in front of him or her. So yeah, I think it also depends on like the market, I think, right? If things are
100%.
booming and you're super busy, you have probably a little bit more leeway to take that risk of trying to, lateral to another group. Okay, fair enough. So, but in terms of your specific experience, you kind of went through HR because it was kind of like a strange time, and so like, hey, are there seats? They said no. So then you're like, hey, did you let them know at that point? Hey, I'm going to recruit full time, or were you like, hey, I'll take it, and then with the thought process of, hey, we don't know what's going to happen with the world, and I'm just going to keep looking, kind of thing.
I was not explicitly saying I was going to recruit full time, but I did make it very clear I wanted to do healthcare, and I think they tried to move me internally to like more of a coverage group at Piper. They're looking around for that.
Yeah,
I think they still want to have me on the platform, but
yep.
I was looking elsewhere, speaking to different banks.
Things were booming at this point, right? Things were going crazy, right? Like deal flow was exploding. And so talk to me how, like, going into senior year, knowing you kind of have that return, but like also knowing you weren't where you wanted to be, how did you approach things in terms of, like, had you networked aggressively leading up to the Piper Sandler offer so that you had like a wide base? Was it like 50 people one-on-one you had talked with, 100 people? Did you just rewarm that network, or was it like you had to start from scratch because you got it so early, or like you had only talked to 20 people or something? What was that like?
Rick, I couldn't even count how many people I spoke with.
I want numbers. I want rough numbers. At least give me something.
There must be like thousands of emails I've shot out. Probably like hundreds I've gone on the phone with. Even during the summer, I was
so like 200 plus. 200 plus. Or 150-ish.
I'd say
don't feel bad. We had a freshman who did 130 coffee chats in our.
I'd ballpark between 1 and 200 like easily. I would.
Yeah. And this was sophomore year. This was before you even got the Piper role, or this was.
I'm talking about like total must be like, I don't know, like 300 people, like easily.
Okay.
I was going through my email the other day. I just remember seeing like thousands of shots that I shot, and like I had a somewhat decent conversion rate, like, or I don't, maybe I
talk about that just for a second, because like, that's pretty, like, so when I look at like numbers, typically what I see in terms of numbers is if people start freshman year early and they're like building that foundation, by the time recruiting comes around sophomore year, I have seen 100, 150 actual calls, one-on-one calls.
Mm-hmm.
And like usually, but more common is in the 50 to 80 range, right? Of one-on-ones leading into on-cycle. Like sometimes they don't start till sophomore year. They're busy. They're doing like, 5-10 calls a week up until recruiting kicks off in January. But you're telling me 200. So that must have been like, did you start freshman year where you were just like networking? You knew how to do that?
Yeah, I definitely started I went to like early engagement programs. I remember freshman year. I'm speaking from a very privileged position where I went to a target school that I think has alumni that really help out their like current underclassmen. So I definitely started freshman year for sure. I leveraged every single relationship I had, and I went in with the mentality that the worst they can say is no, right? So this including like LinkedIn as well, like not just email. I shot my shot everywhere. Went through alumni databases, any degree of connection, like reached out to high school contacts. Like I tried every combination of filters on LinkedIn to like back into people that I could speak with. Right.
Yeah, we call that affinity groups. You did try, like, you had like 15 different affinity groups. You're like high school alum, this, that.
From New Jersey.
From Jersey. Yeah.
Anything that could work, or like friends of friends. I was in like this thing called Contrary Capital, which is a student venture program where I was a scout on campus. So like reaching out to other scouts in my program, like, hey, do you have any friends who worked in banking, who you could introduce me to? Things like that. You said, affinity groups. Left no stone unturned. That's every time people ask me for advice, I'm like, do everything you can. The last thing you want to admit if you end up not getting an offer, that you didn't do enough. I want to say, if I end up getting an offer, I want to at least have the peace of mind that I did everything I possibly could have to best position myself to get an offer. And so, in numbers, I would ballpark it. I'm just going to take a guess. Maybe say like 1,000, 2,000, somewhere between 1,000, 2,000 shots shot on LinkedIn.
Yeah, but one-on-one calls, would you say like people
one-on-one
280 or something like that, or 320 calls, or 350? Not now. I'm saying back then, like when you were at sophomore.
I'd say from freshman to like up until I got my Lyric offer and kind of stopped, probably like 200-300. I'd say that I've had.
That's intense.
Uh,
It's a lot.
yeah. And this would
That's
include on-campus coffee chats when they came to campus, things like that, like, and any
yeah.
sort of opportunity easily. Um, and
I love that.
then
Yeah.
from
Sorry. Go
super
ahead.
days, probably had like, so like somewhere ballpark 10 to 15, maybe.
10 to 15 super days overall.
I want to say something like that. Yeah.
So yeah, let's talk about that because so maybe the other thing that's interesting about this is you know when you were trying to make that decision of hey, I got the return, but it's not in the group I want. You probably, at least I would have a lot of confidence if I had spoken already with 200 people one-on-one, and I knew I had some good connections with at least like call it 10% of them, like really strong connections with 20 or 30 of them, and I knew hey, if there's any full-time process that's going to kick off, I am in that process. Did that go through your mind? Was there any kind of calculation of like, hey, you know what, I'm going to be okay if I don't take this DCM offer and I re-recruit? Or was it more like, hey, I have that in my back pocket, but I'm going to talk, and then you just started kind of rewarming your full network? Because obviously there was a ton of people you could just ping and be like, hey, I got the return. This is where I'm at. Is that kind of what you started doing? Kind of call it start of senior year?
Yeah. Sorry. Yeah. As soon as I got the return offer, that's pretty much what I was doing, hitting the phones, and continued to do that for like the entire course of senior year. Got some offers, final rounds here and there. It wasn't until like spring of senior year that like hiring really picked back up for like entry level analysts, and that's when I got the most kind of traction.
It's interesting. Was there any traction immediately upon receiving the return? Was there like any full-time process you got in there near the end of the summer? Because I know sometimes some banks will host like a small, like a full-time recruiting for the year, you know, because they didn't have enough interns or they didn't like, so they'll try to like get some lateral candidates. Were you in any of those in like August timeframe? Like August or just early September, or no?
Yeah, usually that's the case. I thought that'd be the case, but I think after COVID, banks either we were pretty binary, like no return offers, or they gave 100% return offers. So I think it was a unique case for me.
It was a strange year for sure. Yeah.
But there was a lot of like off-cycle kind of full-time recruiting. Like a lot of banks would be like, we're just like drowning right now. Like we need to hire someone. And
it was more asynchronous, weird. Like they're hiring one-offs here and there as they realize, like the deal flow keeps coming, and at rates being this low is driving a ton of
and I hit classes by December. I was just writing my senior honors thesis for the second half of my senior year. So I was like, hey guys, I can start working. If you're okay with me just doing like this it wasn't even for credit. It was just my thesis I had to submit as a requirement for one of my majors. And so I was just writing that pretty much January and recruiting from January to June before I graduated. So I was like, hey guys, I can start working whenever. I can start immediately. Like, let me know. So I was flexible in that way. So that probably got me a lot more looks as well from banks. One thing to keep in mind.
Yeah, and I know at that time, I remember talking to some of the associates and analysts that were in the fire. It was one of the craziest times. Like I remember people being like, I haven't slept. It's like 120 hours a week. Like it was bad for some people. And so I'm sure there were certain groups like pounding the table, like we need more bodies, get some people in here. So yeah, let's talk a little bit about that. So you kind of rewarmed. Did you just hit up everybody once you get the return? Like, are you just like, were you strategic about how you like let everybody know? Were you targeting just like healthcare bankers first? Like, how did you think about going through that process of like, was it just like, hey, I'm just going to steadily work through the full list of contacts of people I've spoken with and let them know what happened and try to get on another call?
No, it's honestly everyone that I could possibly revisit.
Did you like, in terms of your strategy, like you probably didn't blast all 300 in one blast in one go. So were you strategically like moving through the list, like a certain amount per day, like 10, 20 a day or something like that?
I think it was very ad hoc. Like I would have like so many emails. I would just go through my old emails, my old LinkedIn ones, and it wasn't a certain number per day necessarily. I'm sure you could ballpark to like maybe 10, 20, try to get as many as I could before, I kind of ran out of steam. But I wanted to, again, go with the no stone unturned kind of policy and try to reach out as much as possible. I think, though, the one major difference I'd say is, all right, here's like my baseline now. I had this Viper offer, like where I want to go up from there. So I wasn't reaching out to, I knew I wanted to do banking or private equity or venture capital. So I wasn't reaching out to like sales and trading. I wasn't reaching out to like red ones. Yeah.
So out of the like 200 something people you had spoken with, there's probably like really more like 80 that you were focused on.
Yeah, or something like that. And there's like other things on, like if I just saw jobs pop up on Handshake or like LinkedIn Easy Apply, I would throw something there. So like
Yeah.
some random ones I did, I remember I had a super day with LinkedIn's in-house consulting group, the
Oh, interesting.
strategy development one. So like, I don't know, I was throwing a little bit of a wider net in
Yep.
some ways, because I'm like, why not just do it? So I just like did some cases and practice. Didn't end up getting the offer, but things like that. Like if there's anything cool, I wasn't like turned off. I wasn't like only banking, private equity, venture, but broadly,
So
those are the
yes.
yeah.
So as you're kind of like in the spring of senior year, you have a ton of time. You're talking to a ton of people. You mentioned it was a little bit like sporadic in terms of like you had opportunities, but maybe they weren't all aligned. So it can kind of create a difficult decision. Like if you get an offer and it's exploding, did you face anything like that kind of in that senior spring where you had to let an offer go? And then before you took the Lyric one?
Yeah, it was kind of crazy. Everything happened late April, early May, and right before graduation. So I mentioned that LinkedIn interview, that was, I think, April 20th. And then there were, from there, a bunch of warm leads that like just all came up at once. So I remember it was TPH, Tudor Pickering Holt Company, the Houston arm of Farrell Weinberg. I had a relationship with one of the directors. I met him freshman year. We did a UChicago trek to Houston. And
Cool.
I just had kept in touch with him over the course of several years. Randomly, his sister lives in the hometown that I grew up in. See, you never know what's going to lead, one thing's going to lead to another. And that was enough to like reach out. One of my friends had summered in that group and got a return offer and told me, hey, like someone's not taking the return offer. You should reach out to so-and-so. And he's like, yeah, we'd love to like have a super day with you. Kind of because I've been keeping him warm and talking to him. He was willing to do that. That came up the same week that one of my fraternity brother's sisters was in Blackstone's real estate group. And she said, yeah, we're like drinking water from a fire hose right now. We could hire someone if you're willing to start. And I'm like, yeah. And they said, you're a smart guy. Like you went to Chicago. Like we would love to like, bring you on ASAP. Like we'll give you a super day. What else?
William all happened like back to back to back. Wow. Back in the same week or two?
Literally in the same like span of 2 or 3 weeks. Yeah. It was all in that span. And then who else was there? William Blair Sponsors. Also that group I remember specifically had really clicked with one of the MDs who ended up being the head of sponsors that I worked with at Greenhill a couple years later. Small world. But I had a super day set up with them. And then Lyric, it just so happens, my mentor from high school, he was at Bank of America's healthcare group. And I hit him up. I said, hey, is your group still hiring? And he's like, I'm actually on garden leave right now. My whole team, like a large group of individuals from the healthcare group at Bank of America were on garden leave and joining Lyric. And he's like, I'm going to Lyric. We're actually looking for analysts. Would you like to like interview? And I'm like, yeah. This all happened so sporadically. Like I never thought to hit up like my high school mentor. I don't know why I didn't, but I happened to think of it. He's like, we joke about it now. He actually went to war and he wrote my letter of recommendation. He's a very close friend of mine. And he brought the story the other day. He's like, yeah, you texted me at 5 p.m. on a Friday when I was on garden leave and I was at the bar. Like there's a very non-zero chance that I wasn't going to reply to you. And so, well, I'm glad he did. And I spoke to all these groups. The offer from Lyric came very quickly because I had this warm intro from a director level guy who was coming in. And so I had a very quick process, spoke to the two heads of the group, had like an hour-long conversation with each of them. They said, you're so-and-so's guy. We like him. We like you so far on the phone. And they gave me an offer. And back then, SUB was throwing out very healthy signing bonuses, even referral bonuses to bring on some of my friends. So I brought on one of my friends from college as well a couple weeks later. And so it was very enticing. I'm not going to say the monetary.
You share? Is it like 20 or 20 plus? Or
at the time, it was 20 or 25 for signing.
For signing, but then referral. What was a referral? I'm curious.
Referral was like, I think it was 15. It was 7.5 up front, then 7.5 if they survived 6 months. Yeah. So like to be a
survived, I love it.
be a first year analyst and get that much like thrown at you, and you're helping out your friend too, who like you get to work with one of your buddies from college in the same group. Like this is a no brainer. Like this is great. And sure, the name brands were like, you see Pearl Weinberg, you see Blackstone, you see Blair, you see all these other places. But the people, I think, coming back to it, what I mentioned before, I have my high school mentor was my staffer. That was a big draw for me as well. I got to work in healthcare again. These other groups were obviously not healthcare, even though, they're great product and coverage groups. This is exactly what I wanted to say. It was healthcare services and technology, right in the middle of it during 2021 when all these big companies were IPOing. Teladoc, Talkspace since have not performed so well, but this was the heyday of it. And so that's what made me find my way towards this opportunity and accept that offer.
Okay, so was this SVB at the time? So talk to me about the SVB and give a little context for people who aren't familiar with what was happening back then. And so you accept the Lyric offer, obviously. Did you even get through all the other processes? Did you land any other offers you had to turn down, or was it like Lyric came so fast that you bowed out of the others?
I took Lyric, and because these other ones came through like warm relationships, like people that I had been talking to for many years, I did the courtesy of telling them that I got this offer, I accepted it, and like, you should pursue other candidates. A lot of them asked me like, oh, like where'd you go? This and that. Had to play a little bit coy. I didn't know how to react. So I said, I'm going to a middle market investment bank based in New York, focused on healthcare, is what I told them. And I think they were fine with that. I think they really
were you worried about like them talking to like Lyric or something else? Or like, why didn't you want to tell them like where you were going?
You never know. I didn't know I was still like a recent grad. I was 22. I didn't know the right thing. So I said like, tell them enough where it satisfies them. And because I was under the impression like I don't owe them anything, like I'm doing them a courtesy by telling them this. I could have done this today, then rejected the offer. I thought so. I just gave them enough information to, kind of move it along, and didn't want to. Yeah, like you said, I didn't. Maybe they were going to do something to tell Lyric or something like that. Maybe it's silly to think that way, but just didn't want to risk at that moment.
Fair. Okay. So you're kind of yes. Sorry. Go ahead. Let's talk about SVB and what was happening back then. And
So okay, I'm gonna try to get the timeline right. It was Lyric Swan originally. So Jeff Lyric was the founder of this. He started off as a trader, and then really got into made the name through like biopharma. ECM is like the original bread and butter. I think Dan Dubin, if he's still at Lyric, was like the mastermind behind all of that as well on the banking side. And then it became Lyric Swan. Then I want to say in 2019 it became SVB Lyric. And then that was just biopharma ECM primarily. There's also research, trading, things like that. Then in 2021, they did this huge build out, bringing on Barry Blake and Robin Neer from Guggenheim, poached the two heads of the group there to build out the healthcare services vertical. They poached the whole UBS tech team, Jason Auerbach's team. And that went on for about 2 years. And then the whole collapse happened in 2023. We ran it from SVB Lyric to then SVB Securities, and then 2023 March, that's when the collapse happened. They split off. I think Jason Auerbach's team, the tech team, is now Moelis's tech team, and the healthcare services team became just Lyric Partners again. And they did a buyout with Baupost, I believe, and they've been continuing ever since. They're still around, doing primarily healthcare service, M&A, and I think equity raises mostly.
So SVB kind of got split off again. It like Joy came and then basically got split off.
I actually don't know what's going on with SVB, the parent company.
I have no idea. Yeah, I have no idea. But my point is, I remember being here. It was crazy. It was basically like a run on the bank, like a traditional run on the bank. All these like huge startups out here in the Bay where I'm at, like, were like worried they couldn't get the access to their capital.
For sure. I left in December 2022, 3 months before this happened. I like to tell people I saw the writing on the wall, but in reality, I was on the banking side. I wasn't on the risk side, so I had no idea. I just had very fortunate timing. But the worst part of it was I had like some stock in SVB through the employee stock program, which was there, and it appreciated like crazy in 21 and 22. So I'm like, wow, I'm just gonna ride this SVB stock to the moon. Little did I know this was gonna happen. So I missed out a little bit there. But
let's talk about this lateral move from Lyric to Greenhill, and I want to know. I think you mentioned it early on when you're in your summary. Like, was it one of your mentor or your head left themselves and kind of brought you with them, or what was the kind of reason to even jump to Greenhill?
Yeah, so I was kind of noticing that deal flow is slowing down a little bit towards the tail end of 2022 in healthcare services compared to the heyday that I came into in 2021. And so I was looking around, primarily looking at private equity opportunities actually. So had been in a process with several like upper middle market private equity firms or off cycle. I remember on cycle recruiting was the same day as 3 live deals were kicking off for me. There's just no way I was physically going to be able to participate. I remember trying to get myself to an interview, just impossible. So unfortunately, I missed out on that. But off cycle was getting plenty of opportunities. I think private equity hiring was still very strong back then. And these were looking for immediate hires too. They weren't waiting for me to finish up with my analyst program. So
right.
I was looking at those, and then a unique opportunity came to me. I was talking to everyone, right? Like all the recruiters reaching out to me, was getting a lot of looks from different places. One of the recruiters reached out about this opportunity joining Greenhill's private capital advisory group. And I didn't know what this was at first. I thought it was just being like a placement agent. And this world of secondaries is really starting to gain some traction. At this
Can you, for the listeners who don't know what a placement agent is versus, secondary? Yeah.
Would be like someone who raises money for a fund. You're essentially like a fundraiser. You're outsourced IR. You are making capital introductions for like a private equity firm on the bank.
You're like, side. Oh, what's this private capital advisory? Is this just like a fundraising role where I'm helping these funds raise their next fund?
That's
and so you're like, not too interesting. But then they're like, no, this is secondaries. This is something completely. It's an advisory capacity, right? It's exploding. So talk to the students who don't know what secondaries means and all this stuff, because I think it's important for them to be educated on that.
Definitely, yeah.
We just released a secondaries course too, by the way, private equity.
Oh, awesome! Yeah, that's you're talking to someone who got in very early, but by almost by accident. But now I've become like, even at Wharton now, I'm hosting dinners for students. It's so hot now; everyone wants to get into it. With these small group dinners, we might do a panel coming up. But in a nutshell, secondaries is a derivative of private equity. What does that mean? Rather than the private equity firm making investments into assets, you are now an investor who's taking a investment in the actual private equity fund. You're one step above. So rather at the asset level, you're at the fund level. And very quick and dirty, there's 2 types of secondary transactions. There's LP-led transactions, which is a limited partner. Think of an endowment like a school, a family office, a foundation, who actually invests in private equity funds. So think about Blackstone fund. These people are the people give money to Blackstone to then invest. And an LP trade is basically, let's say a school wants to build a new dorm and they need some money. They'll come to an advisor like Greenhill, Perella Weinberg, and they'll say, hey, I need to offload this stake I have in Blackstone. And we'll help them sell it to an investor in the secondary market. And that's a simple kind of trade that they'll make. A GP-led is a little bit
offering liquidity. Basically, you're helping something that's typically a very illiquid private equity, and allowing these stakes to be, basically allow them to get their capital out.
Precisely
do whatever they need to do. Yeah. So that's the LP side. That's the LP side.
That's the LP side. Yep. The GP side. And I think of this from the advisory side. Who's my client? LP-led. The LP is my client. I'm helping them sell. The GP-led transaction, I'm the GP or the sponsor or the private equity firm, all the same thing. We're helping them get liquidity. So what does this mean? Imagine we're going to use Blackstone as another example here. They have an asset in a fund that is 10 years old. They raised this money back in 2015. And the investors in this fund are asking for their money back. Obviously, it's been 10 years. They want it back. But Blackstone says this asset is really strong. It's making us a lot of cash flow. We want to continue to hold on to it. We think it can grow even more. And so what we help them do is sell the asset to themselves. They move this asset out of one fund, move it to another fund, and we raise them the money as an advisor to sell the old LPs out. We give them liquidity, and we bring in new LPs to recapitalize the fund. So you have new equity. Blackstone is still managing the fund, but it counts as a full exit. Technically, it resets the returns in terms of IRR, MOIC for the fund. It resets the basis at which Blackstone earns management fee. Let's say 10 years ago, this asset was marked at 100 million. Now it's, let's say, 500 million, just to use round numbers. Now they're earning management fees on this new $500 million valuation. So you can see how the old investors are happy to get their liquidity. New investors are happy that they finally get an opportunity to invest in this asset, which they wouldn't have been able to before because in a fund that was already raised. And Blackstone's happy because now they have investors who are giving them more money. They're earning management fees on a new basis that's higher. So it's a win-win-win. And that's why it's been so popular.
It allows them to put money to work too. These massive funds, right? It allows them to maybe put some money to work in the new fund, right?
That as well. Yeah.
On the GP type deals, and correct me if I'm just ignorant about this stuff, is it always like asset by asset, or sometimes they're pooling like a group of assets and doing like a like a full, so is it always like one company at a time, these GP led things, or is it sometimes like a pool of them?
Yeah, that's a good question. So there's two types of GP leds now, digging a layer down. There's single asset and multi asset. Single asset is easy to explain that example, where you do just one fund, one asset in one fund, move it to another. There's also multi-asset transactions, which is doing the exact same thing, except now you're taking multiple assets from one or multiple funds and repackaging it as a new fund opportunity. And I've seen all different kinds of multi-asset transactions. They could be for assets that are at completely different stages. So it offers investors different return profiles in terms of more mature assets that have more stable cash flows, with paired with newer assets that were recently invested that have a lot of growth potential. I've seen assets across different sectors if investors are looking for diversity. I've seen situations where there's two large assets that are performing really well that investors really want exposure to, along with a bunch of smaller assets that maybe aren't performing well or just smaller exposure. And those are sold as what we call like option value. They're just thrown in to the fund because the private equity firm needs to clean up their previous investments. And so the new investors get exposure to two really good assets at a cheaper price because they're being forced to buy these smaller exposure, possibly not as strong performing assets with them. So it takes a lot of flavors of these multi-asset transactions.
That the negotiations on this just seems like it'd be insane, especially if there's like a very big different mix of LPs and like fund 1 versus like fund 5. Like if it's a similar mix, it's probably easier because it's all like, you know, arm's length. It's not arm's length. It's like, okay, yeah, we're going to do this for this and it's what's best for you guys. And you can figure it out because it's more just like accounting and resetting the basis. But if you're like, mix of LPs is super different from later on. Like I'm sure like, so do those LPs like hire advisors on their end for like in terms of trying to figure out like to advise them on the on that negotiation?
Yeah, that's a really good question. I have definitely done both sides of it. It's less common that LPs hire someone. Usually they have to elect whether to sell their interests or
if they can just do it or not.
It's more of a yes or no, but there's some situations where the deal, as you mentioned, is a little bit hairier. There's a lot more things going on. And so, we work with like a family office, for example, and advise them on what their options are, what exactly the economics will be and potential field of returns will be for them if they choose to either roll forward into the new vehicle or sell their interests. And so
that's a little sidebar. Little sidebar and secondaries, little mini lesson here for the listeners.
I can talk about it all day. You know, like I think it's a very hot industry, and that's the reason I kind of went into it. There's a lot more nuances and a lot more interesting structuring considerations, and it's evolving over time. M&A is already very mature industry. Having done both, I have a unique ability to speak about my experiences in each one, and I'm just very bullish and you know, really enjoy.
Well, it's growing so fast that the funds are so massive. They had to put money to work. They have to get liquidity on the old funds, right? There's just a lot of tailwinds behind the secondaries market just exploding, right? So, talk to me a little bit about, so in that transition, so you kind of like were pitched this private capital advisory, and then I interrupt you. Oh, let's talk about this. But so let's go back to your story. So PCA or private capital advisory secondaries. You're like, what is this thing? Is this a fundraiser? Is this a placement agent? So eventually you figure it out. Okay, this is interesting. Talk to me a little bit about the process of jumping from Lyric to Greenhill.
Yeah, so it was a recruiter who reached out and he said, do you want to learn more about the opportunity? I said, sure. I'm always willing to have a conversation, especially if the group's showing interest in me and likes my background. I could at least, the worst thing that could happen is, you know, we go separate ways, but, you know, the connections I can make, you never know when they're going to come back around, right? So I had a couple of conversations with some of the MDs in the group, really liked them. For example, just had another, I guess it always comes back to New Jersey, had a connection there in neighboring towns.
Jersey Shore.
I wouldn't go as far as Jersey Shore, but they were from North Jersey, the better part. But we won't get into that right now. They were in neighboring towns in Jersey from where I grew up. And so automatically had some rapport, just had a really good vibe from them and the group. And it was really just ongoing conversations with multiple members of the private capital advisory team there. And then I spoke to the head of GP-led secondaries in the US, and he's the one who really sold me on the vision of secondaries and where it's going. He had formerly worked in big law on the secondary side and switched to the banking side of things. And he was willing to give up a very lucrative law career to pursue an opportunity in banking to make even more and follow the growth of the industry. And so I saw how bullish he was. He was so excited about it. I'm like, this is someone that I really want to work with. Someone's like, he was firing me up about the industry that I didn't know about. And I think the M&A chops really came in handy. He had the legal background, knew about the process through and through. I could model and, build whatever marketing materials he needed. And so we kind of fit like hand in glove, me and that MD and another director on the team who was very plugged into the secondaries world, knew all the buyers. That was one of the first teams I worked on. It was so lean. I was, also getting looped into a lot of like investor calls, like handling things one off with the associates at these secondary investors because, we only had so much bandwidth as 3 people. That was a really cool experience. I'd say for the year I was there before the Mizuho acquisition happened and the team kind of split up. I really enjoyed that experience. And I'm still very close with those 2 individuals.
Sounds like you were very busy for that year.
Yeah, it was busy for sure, but in the best way. Like that's like the 1 year of banking in particular that I really genuinely would not trade for anything. SVB was sweaty in its own way. I think there's differences because I was virtual, but at Greenhill, it was just a very unique opportunity. And if there's anyone,
were you in office at that point? You were in office.
Yeah, I was in office 4 days a week. Fridays were optional, but honestly, I would come in Fridays as well if the team was coming in. Like we just had such a great time together. And we're working also with the M&A team on a couple deals, which were kind of like in between working with sponsor coverage bankers. So got a wide variety of experiences and got to sit between a lot of different groups in the bank and meet a lot of cool people.
Okay, so Mizuho comes in, makes the acquisition of Greenhill. Well, what's going through your mind when you hear about it? How did you hear about it? And then what's going through your mind? What are the heads talking about? Or what's your MD telling you?
Yeah, I woke up one morning, saw the headline on Newswire or one of those, or Wall Street Journal or whatever it was, and immediately text my MD. I'm like, or the group chat, the 3 of us, the director and the MD. I'm like, did you guys see this? They're like, yeah, come to the office now. And I get changed as fast as I can. We go in there. I'm like, what's going to happen here? They're like, we don't just as much as you. But I think because Mizuho already had a sort of private capital arm, there's a company called Capstone. They acquired in 2021, I want to say, and or prior to that. And so there's always a fear, is this going to become redundant with that group? And I think the whole PCA team kind of shared that because within a couple months, most of the entire team, I think, except for 1 or 2 people in the US, had jumped to Houlihan Lokey, different other placement agents, and then my boss and I jumped to Devon Park Advisors to work with John Costello, and the Europe and Asia team stayed in place. They're still pumping along, working on Greenhill secondaries in those geographies because I think they already had an established presence there. They stuck around, but in the US, the team is still around. My director's still there, but I think more or less most of us have, the primaries team I don't think is there anymore as much. But yeah, that's kind of what happened following the acquisition by Mizuho.
So since everywhere you go gets acquired or something happens big, so so Greenhill, Mizuho takes over. How long after that announcement before you're working at, what was it, Devon? You said Devon Park?
Devon Park Advisors, yeah.
Devon Park Advisors, which is known for secondaries, right? Smaller, but pretty well established in secondaries. So how long before you made that jump?
So this was I think the announcement was sometime this summer. June through August at some point. And so I was in conversation with them. My MD had obviously moved there before I started. I was evaluating different opportunities, to be honest. I was looking at Avidity as well. They're now Piper Sandler secondary arm. I was speaking to a bunch of different advisors around the street, and ultimately
mostly in secondaries.
Yeah, I was looking pretty much just at secondaries, to be honest. I think at that point I was still engrossed in that space, and I mean I still am, but I thought, I want to stay in advisory. I didn't really find on the investor side a strategy that I'd fully aligned with yet. I think that's one thing. The advice I got is if you want to go to the buy side, secondary is a little bit different than buyout private equity. Buyout private equity is more or less the same, depending on what shop you. Everyone's trying to add value. Everyone's trying to find unique opportunities. But in secondary is very unique investment strategies, whether it's single asset, multi-asset. different industry tilts, you name it. So I want to stay on the advisor side for a little bit longer, so I can get more familiar and to see all the different kinds of investors out there, see different kind of deals. And so I think it was around November that I had left Greenhill. I took the opportunity to travel a bit. Took November and December off before I started at Devon Park in January of 2024. And that was also a big part of it, being able to, you never really get the opportunity to take time.
Where'd you go? Where'd you go?
I went to the coolest place I went to was Kazakhstan. I went there with one of my buddies from undergrad. He lives there now, and that was a really, really awesome experience. I don't know that I'll probably go back maybe for a wedding at some point, but that was a really cool opportunity. Like, when's the next chance you're gonna be in between jobs? I'm gonna be in between jobs, and I can go to Kazakhstan to hang out for 2 weeks. And so that was a really special time. Went all over Asia. I also got to go to the foothills of the Himalayas in North India. The border tensions at that time had calmed down, and I was finally able to make that trip. That was really special to me also. And so, yeah, it was a really nice time being able to travel around the world.
So you got to breathe a little bit after the couple crazy years. So you needed a little breather. Well earned. Okay, so you get to Devon Park Advisors, and you're starting in January of 2024. And this is where now? In New York? It's
Florida. I'm in West Palm Beach.
Yeah. So you're moving south. You're going down to Florida. I know that I think a lot of firms kind of shifted towards Florida during COVID. So talk to me a little bit about that, like culture shift, and then the Perella acquisition. Let's talk about that. So, like, talk to me, because you were there for another year and a half before, going to Wharton, right? And so, was it very different from the Greenhill? Like, was it smaller? Was it bigger? What were the dynamics like in terms of like deal flow, all this stuff? Because I think it's interesting.
Yeah. So obviously smaller firm than Greenhill, but the team itself was around the same size as the PCA team at Greenhill, in the US at least. At Greenhill, we also had a London and Hong Kong office, which the whole team was probably larger, but Devon Park was about 15 of us. At Greenhill, I felt like I directly worked with like 2 other individuals on the secondaries team. So in the US, at least, so it was a little bit different. At Devon Park now, it's probably, around 50. I was one of 3 associates when I started. And then since then, I think they've grown a lot now with Perella, but I like the experience here because we were purely focused on GP leds. I did a little bit of LP led stuff at Greenhill, and I mean, it's not bad, but I think my interests definitely align more with the GP led. Is more fast paced, more structuring considerations, which I really enjoyed, and the modeling was a little more similar to M&A versus LP leds on the advisor side. At least it's more kind of just plug and chug. You kind of just have pricing, people bid, and that's really it. And then the lawyers really handle the fund transfers. And so GP leds were way more interesting at Devon Park. We also worked on a number of like unique transactions. Like I worked on a take private deal, worked on Manco level transactions, in addition to like fund co level CVs, like straightway CVs. Yeah, I really liked the different kind of deals I got to work on. That was a really unique experience. I feel like now I can kind of handle anything. Maybe not like restructuring. That's a little outside of my career, but I feel like the deals were at some points borderline M&A with take privates, capital raising. So like I can hang with the kind of DCM, ECM kind of guys as well. And so I really broadened my toolkit. And being on such a small team, I got so much rope to run with things. So I developed a lot of investor relationships with secondary buyers, and still like have those today. Like they become like friends at this point, and really helps having that as I want to keep my pulse on the market, and talk to them if I eventually want to move to the buy side. Talk to them about different strategies, what firms are raising. It's always good to keep a pulse. So
nice. So how did things change when Perella acquired you guys?
Unfortunately, I had left right as that acquisition was being announced. I think the week after I left, it was announced. So I didn't really get to experience all of that. Talking to my former associates analysts who are there right now, it seems like the transition is going really well. They're really enjoying being part of the platform. I think it's opened up a lot of doors being part of a larger group. And so I think it overall for both firms, it was just a matter of time. I think Perella got into the secondary space. And I think Devon Park is one of the last, if not the last, independent advisory shops in the secondary space. I think it was just a natural timing for the both to kind of merge. And from what I've been hearing, the integration's been going well. So really happy for both teams. And yeah, would have if I didn't go to Wharton, would have been awesome to be part of the platform as well. Like I did not step away knowing that this was going to happen by any means. Just coincidentally, the timing worked out that way.
And in terms of like your decision to go get the MBA, go to Wharton, was that something where once you kind of went away from Greenhill, the Mizuho Greenhill, and before you had started Devon Park, you had already kind of started thinking about that? Or was that something once you started at Devon Park, you're like, you know what, I think I need a reset at some point after the 2 weeks or the traveling, or you're like, or 2 months traveling, you're like, you know what, 2 years sounds even better. What went through your mind in terms of making that decision? Because I know for some people, like the MBA, it's not like a sure. You probably could have kept going, right? You could have probably gotten promoted to VP, director. There's opportunity costs associated with the MBA. How did you go about that thought process of that decision? Hey, like it makes sense for me.
Yeah, the traveling definitely was a little bit of an eat, pray, love kind of moment. I was starting to think there's more to life out there. Maybe this is something I could throw in the ring just to like have an option. Like I just could take my tests and I could apply whenever for the next 5 years. And then I think a couple of my friends who are a year older than me, they had made a decision. They got into business school in the spring of 2024. And so I was talking to them what influenced their decisions. And the main kind of idea that stuck with me is like, you're not going to be able to get this time back. You can work for the rest of your life. Sure, the opportunity cost is there. And again, this is from a position of privilege where I already worked in banking, had some like savings. So like you can always come back to banking. Like Wall Street's not going to go anywhere. And you're lucky enough that you found secondaries, have some expertise, have relationships. I think any bank would take you. Like it's not, an MBA is not going to set you back by any means. But yeah, I'm 26 now. So like,
you're young. You're young. So did you graduate young?
I don't think I graduated 22 years old in 2021.
Okay.
That's been 4 years. So I'm 26. It was right around average. But
I was an old MBA. I was like 30 by the time I got there. Oh. No, I would know. That sounds true. I was 28. I was 28. Okay, so I was only a couple of years older.
Yeah, I think the average age is slowly creeping down. I think most of my class is like 27, 28 years old. That's the majority. I think I went slightly the younger side for sure.
Yeah.
But I wanted to take I wanted to just get the application. I wanted to apply come spring after kind of thinking about that, like where I was in life. And I didn't know, same thing I mentioned before. I didn't know if I necessarily wanted to go to a specific buy side firm. I didn't want to jump. Then the worst part, what people do is like they jump into private equity or just the buy side in general, thinking like, I just want to get out of banking. And I never really want to put myself in that position because it's a lot harder to change strategies once you start specializing in a specific buy side investment group versus you're on the sell side. It's pretty easy to advisors advisory for the most part, right? So I wanted to hold that off as long as possible, and I still wasn't feeling confident about any specific secondaries group. I would have felt like I would have just jumped because I need to get out, which wasn't the case. So wanted to take these 2 years of business school to really evaluate if I want to do secondaries, number one, if this is what I want to continue doing, if I want to go down the route like entrepreneurship or I don't know, corporate strategy, whatever it is. I think these last few months, I've definitely realized like secondaries is where I want to be if I in the finance world. I think it's maybe it's in a sub vertical of secondaries. I've really taken a liking to real estate secondaries, real asset secondaries. There's a lot of way to be unlocked in the last couple of years there. So maybe within secondaries sub universes that and subsectors I've really gotten a liking to, and having the opportunity to sit back, relax, really like look at what's around me in business school allowed me to realize that versus in banking, you're running at 100 miles per hour. You don't have time to think like that.
Yeah. Yeah. It's interesting. I think, the decision of doing the MBA, there's like the money decision, there's a financial decision of which it can cost you with opportunity costs. You're losing at least $500,000 probably, probably more at that stage, where like you're doing well in terms of earnings, but you're also paying for your living and your tuition and all that stuff. So it can get up there. But in terms of just life in general, and like experiences and your youth, you're not going to get that back. Right. And so like, it's like, well, am I going to be okay financially either way? The answer is probably yes, you're going to be fine. So taking those 2 years to even build out the network more, have that space, I think does make sense for a lot of people. It did for me as well. It's like, I was kind of going. And I thought to myself, hey, this entrepreneurship thing is kind of interesting. WSO at the time was still relatively small, but it was like, hey, this will give me the space to figure it out. Yeah. And it did exactly that. And I see you've kind of sprinkled. You have a few little startups here. You did something called Inform. Do you want to talk about that here and pitch it to the to the listeners? You have them join.
So I'm more of just an advisor to a friend, nothing official.
Okay.
Informed is a text-based news service. One of my friends from college, and I think a lot of us share the sentiment. We don't really read our emails anymore, or we signed up for so many of these newsletters at this point that it's kind of hard to go through what we want to read versus what we don't. And I think a lot of the email newsletters, they don't really get exactly to the point. They'll try to add some fun stories and things like that, which there's nothing wrong with it. Everyone likes content different ways. But as we now have like specific preferences of what we like and don't like, there's some people out there who just want things to be delivered in a succinct form and who want it to come, in a medium that they're going to actually read and not get drowned out with all the other noise. So text-based news service, which gives you the top 5 to 6 headlines every day in 1 to 2 sentences straight to your phone. And that's what Informed is. Really just to block out the noise, get you the news that you need to hear without any nonsense. And I think there's a big demand from people who really want this. And the plan hopefully is to, work with companies to deliver industry specific news that they want their employees to hear. Whatever it is, whether it's law or business or whatnot, they can curate the kind of headlines that everyone should hear before a morning meeting, for instance. What deal headlines, like we're going to be discussing this meeting, things like that. So I think there's a lot of white space, and I'm a very passionate personally about the business myself. I'm not running like the day-to-day by any means, but a huge fan of the business and an advisor to my friend.
It's cool. And so kind of looking back at I'll call it a short career because you're only 26, but looking back at that, any kind of advice you would give your younger self, whether it was during COVID times or when you're at UChicago, looking back at all this, and then I'll ask you one other question after this about being a mentor.
Yeah. I definitely think I doubled down on my advice of following the people and staying away from flashy titles, brand names, things like that. I think I followed it decently well. There's times where I feel like I strayed away from it a little bit, but I would really, and not just in work, right? I would say this in all different aspects of life. Like the people will really make or break your experience. When it does come to banking, you're working 100-hour weeks. I generally feel like the work is more or less the same at the advisory level, but the people that you surround yourself with when you're doing those 100 hours, that's what makes your experience. That's what determines whether you love your life or at some points hate your life. And so to my younger self, to younger versions of myself who are listening, really focus on cultural fit and people. Of course, you're going to go with the best offer that you get, but think twice before, if you get not a great feeling from someone you're interviewing with, or you hear some stuff, that always check it out. Make sure that you're really doing your research, because even if it's an investment banking job will open doors for you, you don't want your life to be miserable. And that's something someone who spent some time in the industry, I can definitely attest to. You don't want that. I've seen it. And I don't. Yeah.
I agree wholeheartedly. You got to do your research if you're hearing things, not just in the forums, but do your back channel checks, LinkedIn messaging, DMs, whatever you have to do to figure out, is this the right place for me?
Yeah.
So just to wrap up, you're going to be one of our new head mentors inside WSO Academy. So any particular people you'd like to mentor, or any kind of people that anybody you think that would be a good fit for you? Obviously, people interested in secondaries.
I think that's the clear ones. Secondaries or financial sponsors group. I probably have spoken to the most sponsors of people my level, just the amount of VPs I've pitched on different opportunities. So I know the sponsor universe probably through and through. If there's anyone who maybe wants to break into private equity straight out of undergrad, or has done banking and is looking at different opportunities in private equity, I have just vast knowledge of the universe of private equity investors. And as you mentioned, Patrick, obviously secondaries, willing to talk through and through about the industry, LP-led, GP-led, single asset, multi-asset, whatever industry, private equity secondaries, real estate secondaries. I'm your guy for that. And I feel like of my peers, I feel like I'm one of the most passionate people about it, almost to a fault. So I just love it. And so, yeah.
That's great. Well, Vamshi, really appreciate you taking the time to share your story and your knowledge, and the little mini lesson you gave us all on secondaries. So really appreciate it.
Yeah. Thank you so much, Patrick. Thanks for having me. And I really appreciate the time we spent together.
Likewise.